A very warm welcome to all of you. So, welcome to this first, not my, as in my first class after the new year. So, wishing you all a very, very happy new year. I hope this one week into the new year and you can only feel the positivity and going on also just positivity and good luck to each one of you in terms of health, studies, and everything. So, welcome to the class today. And today, our topic of discussion is deduction, collection, and recovery of tax, which is chapter 15 of your income tax module, direct tax module, paper 7. So, let's begin our today's class. Okay, so students, today's topic is really interesting and we have some good classes dedicated to it. We are going to discuss deduction, collection, and recovery. From the paper perspective, let me first tell you the weightage of this chapter is close to 10%. So 7 to 10 marks question comes in your exams. So you should not take this chapter lightly. Also, when we talk about MCQs, when we talk about case scenarios, because TDS is one such thing which can be triggered at any question point, whether it's a question of PGBP, whether it's a question of your capital gains, salary, house property. So you should know all these details because this chapter relates to all your income. So in real life also this chapter holds a great importance, and otherwise for the exam perspective it is also more alluring. Again, the drill will remain the same, that please ask your questions, please be participative, and please have your notepad handies to write down some important points which we'll be discussing today. So how we'll be discussing? So this chapter majorly has three parts, which is your TDS, TCS, and advanced tax. Now, TDS again have lots of sections, some close to 15-20 sections, which we'll be discussing one by one in detail. At the same time, TCS this year has lots of amendments. So again, focus should be on TDS also and TCS also. Advanced tax, I know you people are doing from inter level. As such, there is no such change. But when we talk about interest on delayed payment of advanced tax, we've some small points which needs to be taken care of will have to have a great importance. Apart from that, there are some miscellaneous topics regarding filing of TDS statements, TCS statements, your tax collection, recovery of tax, all of these which we'll be doing in this particular chapter. So first thing first, why government has come up to this route. Now we all know that the income which is for a previous year is assessed in the assessment year. So for previous year 2021, the income is assessed in 21-22. Now will the government wait for the whole year to end and then now in this case, now there were already 9 months from the end of the financial year to file the return. So whether it's what you say, whether it's right for the government to wait to get its revenue, no. So what they have come up with is that they have come up with the routes to take tax in the previous year itself, which are namely your TDS, your TCS, and advanced tax. So TDS, the deductor will deduct the tax and then deposit it to the government, but to the credit of yours. In TCS, the collector will collect the tax from you over and above the consideration and deposit it to the government in your PAN name again. And in advanced tax, what you do in advanced tax, simultaneously you estimate your income, see your credits of TDS and TCS, see your reliefs, and then on that estimation in 4 installments throughout the previous year, you deposit your tax to the government, which is obviously for the previous year, which will be used while you will be filing your return in the assessment year. So now when you come to assessment year and when you are filing your return, what happens is you compute your tax liability the total tax liability. Out of this, all these credits are reduced. These are your credits. Credits like you can use it when you to set it off from your liability. So your TDS credit, your TCS credit, your advanced tax credit, then any relief under section 89, 90, 90A, 91. All of these are given. Any foreign tax credit ka relief is which is given here 91 May. Then after that, if again any tax liability is there at the time of filing of return or during the assessment year, you deposit it through the thing called self-assessment tax. Self-assessment tax. This part belongs to the assessment year wala part. So this you will study in your assessment year, assessment procedure wala chapter. Okay? So what is focused now is on the routes through which the government get taxed in the previous year itself. So today's class, obviously, and in fact, half of the next coming class would be dedicated to TDS. How will we doing TDS? I will tell you first, we'll go through some basic introduction. Then for each section, because there are many sections and I trust you need to remember all of them. So please don't ask the ma'am whether we need to remember these sections or not. So the moment we'll start up the section, I'll tell you what type of income is covered under this section, who is liable to deduct TDS, of whose TDS is liable to be deducted, what is the rate, what is the threshold limit, and when the TDS has to be deducted. Now, these are the basic answers, basic questions which you will seek in all of your TDS related sections. But at the same time, some important points, some exceptions, some comments which you need to remember is that what we will discuss. Then any case laws which is particularly very common in dealing, we will discuss that too. Okay, so this is how we'll go on and wrap up our each section related to TDS. Is there any doubt? So now all about TDS only. First of all, this TDS thing is, if you have some idea, let me just tell you in a very basic sense. There's a person who is the payer and you are the payee. He will give you the payment. Basically, it is your income, his expense, you can say. He gives you the payment, and while making the payment, he has to ensure that the TDS is deductive if required as per the sections. So if he has to pay you 100 rupees, then he will pay you only, and the TDS rate of that particular income is 10%. So he will pay you only 90 in your bank account, and 10 will go to the government's account in your PAN name. Okay, in payee's PAN name. Okay, now your income is not 90, your income is 100. Please do not make a mistake to take your income as 90. Your income is 100. Just out of that, some part has been given to the government, which ultimately you would have given. If the assessee does not do so, remember this we have discussed in the PGBP section also, he becomes assessee in default. Just refreshing and trying to make you connect in all ways possible. Okay? He becomes assessee in default, and this expense becomes not deductible to the extent of 30% or 100% depending upon 40AI or 40AIA. Correct? Yes. But if the payee pays the tax directly, files the return, ensures that the income has been disclosed, necessary taxes have been paid, then this person does not become the assessee in default. Correct? Yes or no? Remember? So payee number 1 cannot, as per section 191, cannot say that if the payer has not deducted the TDS, it is not my liability to pay the tax. He cannot say that do not, you are not liable. Suppose this payer does not pay 10 rupees. to the government. He gives you full 100 rupees, and then government comes to you that pay us this 10. You say it was not my liability. The TDS was required to be deducted. He did not deduct it, so it is not my liability. That you cannot say. It would always be the direct liability for the payee to pay taxes on the payments on which TDS was not deducted but was required to be deducted, or on payments in which do not attract TDS. See, not attracting TDS does not mean that the income is not taxable. The income is very much taxable. It is just that the government ensuring having some amount of taxes from the income which is generating throughout the year in their kitty. So I hope these bases are clear. Secondly, in 90% of the sections of TDS, the TDS is deducted at the time of credit or payment, whichever is earlier. Now, what is credit or payment, whichever is earlier? Suppose I took the services from you, I have to give you 1 lakh rupees. Now, first I will make a due entry of that expense. So, expense account debit to Mr. A. So, this is credit date. And then there is a payment done. So if credit is done before payment, that is the expense has been accounted before the payment is made. So if this is done on 10th January and payment is done on 12th February, you will deduct the TDS on 10th January itself. Okay. Now, if suppose you have made an advance payment instead of before getting the bill, there was an advance payment done on 31st December. Then the TDS has to be deducted on 31st of December. Clear? So payment or credit, whichever is earlier. But yes, there are a handful of 6-7 sections which cover only the date of payment to be the date of deduction. Now, why it is necessary to have date of deduction into account? Why it is necessary? Because that is the date when you have to deduct the TDS, and immediately the following month, by the 7th of the next month, basically, you have to deposit it. So date of deduction is of equivalent importance than as date of deposit is. Clear? And specifically when we talk about entries which are falling at the end of the years, it become more of the importance to be vigilant about what is the credit date and what is the payment date. Any doubt? Okay, then TDS rate, which we'll be discussing, will be flat rates. Flat rate means if 20% is written, 10% is written, 5% is written, you have to deduct the TDS at the flat rate. No such charge or cess is required to be added until and unless we are talking about non-residents pay. Because for non-resident pays, you will add such charge and cess as applicable. So if a rate under particular section is 30%, then you will add such charge as per the amount, and then you will add cess, and then only you will deduct the TDS only when we're talking about non-resident pays. If the payee is resident, then the flat rate of 30% will only apply, no surcharge and no cess for deducting TDS. Next, for salary, there is no flat rate. For salary, you apply slab rate. And when you apply slab rate, you take such charge also and you take cess also. So these are the two exceptions. Otherwise, TDS is deducted at flat rate. Now, students, this year since financial year 2021 had major COVID impact. So there are small changes related to COVID in your income tax. So I will in particular TDS section. So I will request you to be all the more attentive regarding the TDS rates. I will tell you when it will come. Secondly, again and again, I'm saying from the very beginning that the person who will deduct the TDS will deposit it into the government under your PAN name. So what becomes necessary is providing PAN by the payee. So payee has to provide his PAN, whether on the bill, whether on any exchange which is happening between them, the PAN number to enable the deductor to deduct PAN. Now, if the PAN is not provided, deductor is not off his liability, he will still deduct the TDS, but at a rate of 20% or the TDS rate, whichever is higher. 20% or the TDS rate, whichever is higher. What do you mean by that? So suppose if the TDS rate was 10% had you provided the PAN, but if you have not provided the PAN, now I will deduct 20% and pay you. But suppose the TDS rate is 30% itself, then 30% would be deducted. One exception is there under section 192A, which we'll discuss. So this is all about a broad overview about what is coming for TDS. Again, PAN requirement as per section 26AA is not applicable on non-residents having income from interest, royalty, fee for technical services, and your transfer from capital assets. Okay, so this is all about your section TDS understanding. Any doubt on the basis? And let me just open your query link. It just got shut. 1 second, students. Done. 1 second. Okay, so Sumit has asked that if paid tax directly, then will payer liability for TDS interest? Sumit, no, payer will not be liable as assessee in default. But again, that happens only when the return is filed and the not payment of tax is just the only condition to be fulfilled. He has to file his return, show that income, then only it would be said that the liability has been discharged. So remember, we did the same thing in section 40A, clause I and clause IA, clause 1 or clause 1A, you can say. Great. So now we begin with our section 192. Very, very, very important section. The first section, I'll come, Padma Namban, I've just given you, sorry if I mistake in your name, I've just given you a broad overview about what is going to come to you. We will definitely discuss each section in detail. Ambika says, ma'am, if ma'am 20% or higher is 35% says. TDS rate would be, again, I'll come to 206AA, but higher rate is that if you do not provide PAN, then the TDS would be deducted at the TDS rate, which is as per that section, or 20%, whichever is higher. Sumit, again, appreciate your query, but I will request you to ask the queries only when the section is done so that others can also relate. Okay? And your query also does not go unanswered. So Preeti, whether it's NRI or whether it's any person, if TDS is deducted, suppose I deduct TDS at 10%, but ultimately your tax liability becomes lower than basic exemption limit. So obviously you will get the refund from the authority. You will get the refund from the income tax authority. But the person who has to deduct TDS, you know, in all these queries, in all these sections, think yourself as a person who is either paying or as the person who's either receiving. Okay? So now the person who is paying does not know all the information criteria of the income of yours. So TDS has been then thus defined at flat rates, irrespective of the fact that your income is taxable or not. For that, you again have some measures of 15G and 15H. Again, that is the secondary part. ठीक है? Any other doubts? Chale, shall we begin now? Okay. So now we are talking about section 192, TDS on salary. This is the first section. Now everyone, what will they do? They will write section name 192. They will write type of payment, salary. They will write deductor or the payer, deductee or the payee, rate, threshold limit, and time. Time of deduction. Time of deduction is important, students. It is very, very, very important. And now since you have some small tax change during the year because of COVID, so it becomes all the more important. Okay. Now, salary. The salary income is the income which is getting taxed in the hands of payee under the head salary. So there's a person means deducted mean any person who is making the payment of salary. Deductee means any payee who is an employee. Correct? Be it resident or non-resident. Rate is slab rate. There is no threshold as such, and the TDS is required to be deducted at the time of payment. Now, how the TDS is deducted in case of salary? Now, this is a very particular case. Those who have not practiced income tax in their articleship, please try understand. Okay, so now suppose every month the salary payment is made. How is TDS deducted every month? Now, suppose a person has, I'll just take a very simple example. A person has an income of 12 lakhs. And every month 1 lakh is required to be paid. Suppose, so now you take the whole year per income estimatedly. 12 lakhs is my salary income. You are the person, you are the employer. So obviously you will know that what is the CTC which is required to be paid during the year. You calculate the tax on this. Everybody give me the tax on 12 lakhs. Quick. You will calculate this tax including cess. 179,400 is the TDS for the whole year. This is the salary for the whole year. But in April, I'm making a payment of 1 lakh only. Okay? So the TDS, now this 179,400, I'm standing in the month of April. I have to know that this TDS would be deducted on an average basis during the whole year. So 179,400 would be deducted on an average basis during the whole year. So monthly tax liability, TDS liability comes to 14,950. So out of this 1 lakh, 14,950 would be deducted, and then the net payment would be made to the person in his bank account. Clear? Now we stand in May. Again, the whole year salary stands to 12 lakh. TDS which comes due on 12 lakhs is 179,400. Yes. Will I divide this again by 12? No. Will I divide this again by 11? No. I will say minus TDS already deducted 14,950. So 179,400 minus 14,950 comes to 164450. Now this would be divided by 11 because 1,64,450 ka TDS is now required to be deducted for 11 months. So average TDS comes to, again, it will come to 14,950. Now, this will go on and on until any salary figure during the year gets changed. And will you please elaborate? Yes. Now we stand in June, suppose. अब salary के साथ 12 lakhs के he did outperforming performance and he got 50,000 ka commission also. So now the total salary for the year is coming as 12 lakh 50,000. Now TDS on this comes as on 12 lakh 50,000. Quickly again calculate the TDS for the whole year first. It would come as 1,95,000. Correct? Now the TDS for the whole year is 1,95,000. Already deducted 14,950 into 2 because April may be deducted, May be deducted. So 165100 is already deducted. Sorry, 14,950 twice has already been deducted. Now 165100 has to be deducted in how many months, including June, is my 10 months, right? So in 10 months, this TDS has to be deducted. So now for June payment, when I'll be making him 1 lakh ka salary payment, 50,000 ka commission, I will deduct TDS of 16,510. Clear? Instead of now 1495, June mein TDS would go to 16,510. Now, if nothing changed, then July ka bhi TDS would be same. If nothing changed, it will be same for the year, and you will see ultimately on average basis, you have collected the whole TDS on the salary which was due. Any doubts? Now, why I've explained this, for many of you, it must be a cakewalk, but just in case you have not practiced TDS, this is what it happens when we talk about salary. And you will add surcharge, you will add cess. Now, if you will understand this, then again, you will understand what we'll be going to discuss aage. Clear? How TDS is deducted? Yes. Now if 115 BAC is the section which has been introduced this year, yes. So if a person, any employee is opting 115 BAC, now these are the TDS rate which have been calculated assuming the normal rates. So if any employee is opting for 115 BAC, then at the beginning of the year, he has to intimate his employer that I will be opting for 115 BAC, kindly deduct my TDS accordingly. If you will not tell them, employee will deduct the TDS as per regular rates. Okay? And if the question does not say anything, please apply normal rates and at the same time give an assumption that we assume that the employee has not opted for section 115 BAC. In 90% of the question, you would be given, but it's better to take assumptions if it is not given and to write those assumptions. Clear? Okay. So now the next part when we talk about salary comes is a few things which you need to take care of, which comes in salary circular every year, is now this whole salary has to be taken, slab rates has to be taken. This is clear. What about other income? Can you tell your other income to the employer? Yes, you can tell your other income to your employer. Suppose you receive every year house property ka rent. You can tell him, this is my other income. Please kindly take this also while computing the TDS. You will ask, why is this to be told to the employer? So first of all, there is no such compulsion, but it is always recommended that you should tell your other income so that you can sit back and relax and think that all your incomes pay the employer is deducting the TDS, and now when you will be filing your return, there would be no income tax liability which will arise. Number one. Number two, many a times when you include your other incomes, your slab rates, obviously it's a progressive slab rates which we follow. So many a times the whole liability increases, changes, and you will see you're paying taxes on your salary incomes also, which otherwise would have been TDS deductible. Obviously, everything is going from your pocket, but the matter is only of compliances and avoiding interest payments. You can tell them the other income, and also you can tell them the TDS which is deducted on such other income. Number one. Number two, you can tell them about your deductions which you claim under Chapter 6A. Think yourself as employee. I am your employer. I will deduct your TDS, and I will deduct your TDS computing the whole income. So you can tell me your deductions. You can give me the proof for it. The proof for it. In your health insurance, your life insurance, everything you can tell. Then comes losses. Can you tell me your losses? So suppose you have brought forward losses of businesses. Can you tell me that? No, I will not consider that in my salary income. Your business losses, your horse maintaining races losses, nothing would be considered, but only house property loss would be considered. So if you have a house property loss due to interest which you are paying on the loan amount, that would be considered. So only house property loss is considered. And obviously, all these things goes in a declaration at the beginning of year in Form 12BB. And nearing to the year end, you submit all these proofs. If you do not submit the proofs for all these, then the TDS would be recomputed. If you do not, suppose at the beginning of the year, I say that I pay life insurance premium of 1 lakh rupees, but by the end of the year, I'm not giving them any proof, then they will recompute. So basically, they make a whole computation for me, and then every month they calculate the taxes. So if I will not give them the proof, they will deduct more taxes. Then comes, suppose during the year I have changed my job. During the year I have changed my job. So it is always recommended. And in fact, the employer should also strive that the new employer take the income details of the former employer. Why is this important? So suppose I was working with Y company and now I have joined an X company. So when I have joined X company, they take all these declarations from me. So I should give them the Form 16 of the former employer or give the salary slips of the former employer. Why? Think about it. Why it should be given? Because now suppose Y company के पास you were from April to June. ठीक है, 3 months का salary would have been here. Now on this 3 months salary, he would have taken slab rate ka benefit and then applied the TDS, right? Correct? And then deducted the TDS. Now new employer ko, if you will not tell your previous employment details, what will happen? He will take again his salary income for 9 months. Then give you again the slab rate benefit, which this employer has already taken for deducting the TDS, and then will deduct the TDS. Correct. Now, what will happen when you will be sitting in the month of July filing your return and you will see, oh my God, there is tax payable, and you will think why there is tax payable. Ex-employer has also deducted the whole TDS. Why employer also did deduct the whole TDS? This would be the reason there would be tax payable, because here also he would have taken 2.5 lakh ka slab benefit. Here also 2.5 lakh ka slab benefit would be taken, and payable would be coming of close to 2.5 lakh pay, the tax rate whichever is applicable. Okay? So it's always recommended to give your new employer the details of the previous employer along with the TDS which has been deducted so that he can deduct the TDS accordingly. And then again, you just have to file your return by clicking just the amount, putting just the amount. No tax is payable by you at the time of filing the return. See, again, it is totally on the employee to discharge how much of his liability he wants to get it discharged by the TDS route through the employer. If he does not wish to give his deduction details, if he does not wish to give other income details, that does not mean he cannot take the benefit of it at the time of filing of return. But then he has to be very particular of the tax liability which may arise. For me, if you ask, it's always better to give them the details just in case you get less income or you have more deductions. It will always be profitable for you. You will get the refund amount. Clear? Any doubts? So Gomati, I did not understand your question to check for TDS. And then Sumit, sorry. Very good. Sumit has just given the correct answer. Then, sorry. Viran Jenu says that if we will determine an average tax rate, we can apply it accordingly during the whole year. Yes, you can, but then you have to make sure that no salary figure is changed during the whole year. Because when you do salary questions, sometimes increment happens, sometimes bonuses are given, sometimes commissions are given. So then if you will apply average rate, you will see then the TDS would be coming payable to you. Okay, so it's always recommended to calculate every month just in case any salary is changed or not. Compute the whole computation every month, compute the whole TDS every month, then reduce the TDS which is deducted, and then the TDS which is liable to be deducted divided by the balance of the months which are left, including the month in which you're making the payment. This is how your TDS will come. Clear? Now, anyone has any doubt? And obviously, for claiming such benefits or for claiming house rent allowance, now every year a TDS circular comes and every employer has to abide it. Now, usme again it is specifically mentioned that if you give house rent allowance ka deduction under section 10 or LTA ka deduction, then you have to have the proof maintained with you. And what are the proofs for house rent allowance? Receipts, name and address, PAN of the landlord if the rent is more than 1 lakh. When we talk about LTA, evidence of expenditure, that you have gone to that particular travel, you have taken that particular mode of transportation, you have stayed in that hotel. All of these bills, boarding passes, all of these. When we talk about interest of house property, with all of these, which is basically reducing your salary income, then you have to have the PAN of the lender, name and address. Deduction scale, you have to give them the proof for investments, you have to give them the receipts for all such investments. Clear? Yes or no? Now 192 is not over yet, there is a lot. Next, in 192 we see 192 1A and 192 1B, which talks about your tax on non-monetary perquisites. Now, this is something which we did in detail while we were doing section 40A, and we did discuss section 10CC. I will tell, but I will request you to just refresh your memory and have a connection that how many of you remember tax on non-monetary perquisite. What did I tell? Just try to refresh your memory and think what was discussed while we were doing section 190. I did give you a hint about 192 1A, and I did tell you what which section would be applied for them. Very good, Ambika. Ambika remembers the subsection also. Yes, Shanmungan, absolutely correct. Irrespective, the person who is paying is an individual, firm, company, any person has to pay. If you're paying them the salary more than the basic exemption limit, basically, then you have to deduct the TDS. Even if you're paying it to a household for 3 lakh rupees, then you have to deduct the TDS, irrespective of the fact that the purpose is personal or business. So TDS does not differentiate between personal or business purposes until unless we talk about section 194C and 194J. But then again, for that we have 194M. So any service, any payment, in fact, if you're making and the threshold of that section is getting hit, then you have to deduct the TDS. Very good, Ambika. Very good. I think time for you to give a clap, because I was expecting that you might remember or not, but good. So I'll now quickly refresh every other person memory. Now what happens is, again, monetary salary, non-monetary salary. One, I'm just taking the figures, 5 lakhs, 2 lakhs. On 7 lakh, the person would require to deduct the TDS. Okay, this is in general. But when the person is bearing tax on non-monetary salary, that tax employee का computation में that tax become the perquisite. So suppose the tax on non-monetary salary comes, so I'm just taking flat 30%. Let's take it 15 lakhs. Okay, so tax on non-monetary salary becomes 60,000. So this would be taken as perquisite under the salary income for the employee, but at the same time would be exempt under section 1010CC and would be not taxable in the hands of employee. Okay, this is what employees happen. This is what happens in the hands of employee. Now for the employer, very quick, monetary salary, non-monetary salary, everything is his expense, right? 15 lakhs and 2 lakhs. Everything is a expense, right? Connecting. I'm fast on this because we did discuss it in detail. So 15 lakhs and 2 lakhs, 17 lakhs is the expense, but also at the same time he had borne the TDS of 60,000, which again should be allowed to him as expense, but it is not allowed under section 40A5. It is a inadmissible deduction, and only 17 lakh is allowed as deduction to the employer. Clear? Yes. Now this 60,000 which is deducted, not deducted, but which is paid by the employer, goes as TDS under section 192 1A. So whenever you are writing the TDS under section 192 1A, you do not use the word the TDS deducted by the employer, because he did not deduct it. What did he do? He just paid. So the TDS paid by the employer under section 192 1A on account of non-monetary perquisites paid to employee would be his liability to discharge, and at the same time the employee will get the credit of the 60,000. Any doubt? So please, while writing non-monetary perquisites, do not TDS and non-monetary perquisite, do not refer to the term deducted and deposited, just refer to the term paid to the credit of the government. Clear? Any doubt under 192 1A? This also has to be paid. You can say on the monthly basis. Suppose tax on non-monetary perquisite is borne by the employer, then on monthly basis, whatever the tax comes on this non-monetary perquisite, he will deposit it. He will pay it to the credit of government. Not all one together. Everything on monthly basis. Okay, and monthly basis is very important because otherwise when you will be filing the return, every time you have to give the computation for every month, and if you will even if the whole TDS has been deposited by the end of the year, but interest or late deduction would be liable for you. Okay, so be very 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 vigilant while doing TDS for salary specifically. Clear? Yes. Now another important amendment which has come from this year itself. So please pay attention to it. Under section 192 only, because there are so many things which come. Is section 192 1C. Now students, this is particularly for ESOPs, and that too ESOPs which are issued by ICAI startups or startups which are eligible under section ICAI. Okay. So now what is this? Before that, let me tell you what happens in ESOPs. ESOPs के case में, how many of you remember? There are two types of tax liability which come. One is perquisite, when you exercise the option and the shares are allotted. This is in general. And then when you sell those shares, then capital gain happens. Okay. So when ESOPs are what? Any share which is allotted to you at free of cost or at a price less than the market value. So what would be the perquisite? Perquisite would be calculated on the date of allotment, but would be calculated as per the fair market value on date of exercise. So FMV minus your amount which you have paid would be your perquisite, correct? Now, when you will sell that, capital gain will arise on the sale price minus the FMV, which would be your cost of acquisition, applying indexation or not, as the case scenario is. Okay. Now, this happens for ESOPs, right? Correct? Yes or no? So, this perquisite is added in your salary amount, and then again, on that average basis, the tax is taken from you. Yes, yes. But now what has happened is many startups has written it to the finance ministry that this is just like a notional gain and the tax on such ESOPs should be relaxed till the time capital gains actually happen. So what did Mrs. Nirmala Sitharaman did? If you will listen to the budget speech, she provided a relaxation on tax deduction and tax liability incurrence. Please listen carefully on the ESOP for 5 years. For 5 years. How? Now, this to understand this, again, this general treatment should be clear to each one of you. This perquisite is added in salary when the shares are allotted, and then they deduct the TDS, right? And then capital gain happens, and then the TDS has to be tax has to be paid. This is in general. Now, for ESOPs, what will happen? Please listen carefully. So suppose the ESOPs, again, I'll talk about financial year 2021, assessment year 21-22. The shares were given to you for ESOP for a price of 50 rupees. Okay, when you exercised it, the FMV was 100 rupees. When the shares were allotted to you, the FMV was 120 rupees. Okay. So your perquisite would be, suppose 5,000 shares were given. Your perquisite would be 5,000 shares into 100 minus 50. FMV on the date of exercise you take. You do not take the FMV on the date of allotment. 2,50,000 is your perquisite for assessment year 21-22. This would be added in your salary, correct? Now, when it is added in your salary, the TDS has to be deducted. But if these are the ESOPs of a startup which is eligible startup as per ICAI, and let me mind you, student, there are hardly the one who have IMB certificate. There are hardly 250 startups as per the public domain data. But anyway, so these are only for the startups which are so if you have a ESOP of a startup which is eligible startup under section 80 IAC, what will happen now? This would be included in your income in assessment year 21-22, but the tax on this would be determined, and the TDS would also be deducted only within 14 days. Listen carefully. After the expiry of 48 months, which is after the, one second, this got hanged. My system got hanged, students. Just 1 second. Hmm. 14 days after the expiry of 48 months, after the expiry of 48 months from the end of the relevant assessment year, or when you sell such security, or when the employee leaves the organization. Again, I will tell what is this said. Okay, so I told you that 2,50,000 is your perquisite. There is no change in calculation of the perquisite. The change has just happened is on deferment of tax. So basically, startups told that we cannot pay the tax when this exercise thing happens, because there is nothing in, what do you say, there's nothing actual flow at that time, so it's better to defer it. So our finance minister deferred it by 5 years, 4 assessment years. Okay, or if you sell it before, then you have to pay tax then, or if you ceases to be employee, then you have to pay tax then. So let me give you an example of a basic scenario. If you do not sell it, you stay to be an employee, how will the tax liability happen? So I told you that the perquisite would be treated as income of the year assessment year 21-22, but no tax would be paid on this in this assessment year. The tax on this would be paid, suppose the employee is Mr. A. So after the expiry of 4 years, 22-23 assessment year I'm talking about, relevant assessment year is the year of allotment. 23-24, 24-25, 25-26. So after the expiry of 4 years from the end of the relevant assessment year. So 4 years from the end of the relevant assessment year is the year of allotment, which is 21-22. So 4 years from that, or 48 months from that. So uske 14 days mein the TDS has to be deducted and it would be taxable. So TDS would be deducted on 14th April 2026 on this 2,50,000 ka perquisite, and this would be included in the income of previous year 26-27. Clear? Yes. this the tax would be paid from the income of previous year 26-27. It would be included in the assessment year 21-22, but the tax on that is deferred to 4 years. Is deferred to 4 years. The tax is deferred to 4 years. That means you will, as an employee, pay the tax on that only after 4 years. So now in previous year 26-27, what will happen? You may have your other incomes. This perquisite you will not include in the income amount, but you will include the tax on such perquisite in your total liability. I know this is pretty confusing, but this is how it is. I'll explain it, don't worry. You will include the tax on the perquisite in your total liability as per the rates of assessment year 21-22, and discharge your liability, and your employer will deduct the TDS within such period and you will get the credit of it. Again, now I'll repeat that. Now please listen carefully. The tax on perquisites which happens because of ESOP of a startup under section 80 IEC. First thing, the perquisite would be treated as the income for the assessment year in which it is allotted, but the TDS on that would be deducted only after 14 days after the expiry of 48 months from the relevant assessment year, which is the year of allotment, or from the sale of 14 days from the sale of such security, or 14 days from the day when the employer ceases from the employment of that startup, whichever is earlier. So how will it happen? I should have told you only in this part that after 4 years, the TDS would be deducted on so-and-so date. But from the employee's perspective, what you have to understand is that you will include in your salary the perquisite amount, but the TDS would only be deducted on it in so-and-so date, and you will discharge the tax liability only on so-and-so date. Clear? Yes or no? So this 14 day, and suppose the employer does not deduct the TDS, then as a direct payment, you have to pay the tax within such time period. This is given under section 194, under section 191, sorry. Clear? Yes or no? Take your time to understand it. Sumit Agarwal, I don't understand why do you have to ask the question except the topic which is going on, because isse pata what will happen, your query will only go unanswered. Sumit Jain, yes, salary includes everything. When I talk about salary, I talk about everything, not only the basic one, not only the monetary one, everything. Okay. So how the relaxation of 5 years coming, G Prasad, is because the tax is liable after the end of 4 years from the assessment year. That's why if you will listen to the speech, she said, I'm giving the relaxation of 5 years, because actually perquisite is happening in the financial year, but 4 months from the end of the assessment year is given, not from the end of the financial year when you are exercising or when the shares are allotted. That's why it becomes as 4 plus 1 of assessment year. Good observation. Exactly, Nitesh. If the employee died, so they will deduct the TDS, but the same liabilities have to be discharged by the legal hires. Ma'am, is interest on tax payable by salary? Advanced taxpayer, see, salaried may suppose the TDS is not deducted wholly. First of all, if the TDS is not deducted properly, assessee in default the employer. But if they will not deduct the TDS properly, then obviously you have to pay it through your self-assessment tax, and if interest comes, then you have to bear it. And this is very a particular scenario which happens because no organization or no company or no firm paying salary makes such mistakes. Again, I will repeat, this is only the treatment which happens in ESOPs of 80 IAC startups. Again, simple. On from the TDS perspective, section 192, I'll read it also first for you and then I'll explain it. Section 192, subsection 1C basically says, an employer being an eligible startup referred to in section 80 IAC is responsible for paying any income, who is responsible for paying any income to the assessee by way of perquisite being and specified security or sweat equity shares allotted or transferred directly or indirectly free of cost or at a concessional rate to the assessee, has to deduct or pay, as the case may be, tax on the value of such perquisites provided to employees within 14 days from the earliest of the following dates, which is 14 days after the expiry of 48 months from the end of the relevant assessment year, which is the year of allotment, or which is the assessment year relevant to the previous year of allotment, I should say that, or from the date of the sale of such specified security or sweat equity share by the assessee. So if capital gain happens before, now you have the cash inflow, deduct the tax. From the date of the assessee ceasing to be the employee of the employer who allotted such shares. Such tax has to be deducted or paid on the basis of rates in force for the financial year in which the said specified security or sweat equity share is allotted or transferred. So that means in this example, the TDS rate in previous when on 14th April 2026, I'll be deducting the TDS. I will take the rate which was applicable at the time of allotment of share. Okay, clear? Yes, no. I can explain it before again also, but please take your time to understand it. And TDS is getting deducted here, then that means the tax liability of employee will also arise only in this year, not in the years before. Okay. So when this amendment come, I'll give you a quite fun fact. Everyone was actually thinking that it is only hardly impacting 250 numbers of startups and wondering how many of them have actually allotted ESOPs. But this is how it is. But in general, for other ESOPs, still today, you add the perquisite in the year of allotment as per the exercise price in your salary and then deduct the TDS as per the average rate. Simple. Is salary over? No. Still some case laws. Okay, so coming to the case laws. Now there are not many case laws. One case laws comes is for the tips, and this comes generally in hospitality industry, the tips which you pay. So a customer who comes, pay the tip. Okay, he does not pay, may pay it directly to the employee, but if you go to big restaurants, big hotels, they give them to cut, to basically swap the card, including the tip amount. So, and then this employer disburse or reimburse this tip to the employee. Correct? Yes. So the question comes on this tip, whether the employer should deduct it as section deduct TDS under section 192 on this tip, yes or no? So again, to attract section 192, you have to see one thing, that there is employer-employee relationship. Number two, that the income which you are paying is in the form of salary. So the question comes whether this tip is salary or not. So the Supreme Court in the case of ITC hotels answered there that this tips is not in the form of salary. Rather, this tip should be taxable in the hands of employee under income from other sources. Why it is not salary? Because suppose the tips are not given or not reimbursed. First of all, there are voluntary payments which are paid by the customer to the employee, but through the employer route. Number one, you cannot force your employer to give me the tip amount. So you cannot basically put or enforce the act or enforce the payment of the same to the employer to give the tip. He is just acting as a person who is reimbursing you the amount. So this is not necessarily a salary. Not necessarily means this is not at all your salary. Rather, these are just a reimbursement done on voluntary payments. This should be taxable in the hands of income from other sources in the hands of employee, and no TDS on such tips is required to be deducted by the employer. Another case scenario is of doctor who comes on contractual basis in an hospital. He comes on a contractual basis. I think Manipal hospital, this is the case law. Okay, and then on daily basis, they give them the fee. The hospital daily basis pe give them the fee basis of the number of patient attended as per the OPD billing. So the question comes whether this payment made by the hospital to the doctor who comes on daily basis, but only for the OPD part, whether this would be a salary income. The answer is no. This would not be a salary income because again, no employer-employee relationship. There is a contract, but it's a contract for service, not contract of service. Okay, clear? So with this, we complete our section 192. Again, I'll give you a quick summary of section 192. 192 may we begin with our understanding of how you deduct the tax rates. Every person paying to every person, any person paying to every person's salary over and above the basic exemption limit, whether the person is resident or not, will deduct the TDS as per the slab rates applicable to that employee. The TDS would be deducted at the time of payment. If you're making quarterly payment, quarterly TDS. If you're making monthly payment, monthly TDS, but TDS is deducted on average basis. Then you have to, as an employer, you can take other income details, you can take deductions, you can take losses, but only house property loss. You should inquire about the former employer details and take that into account, and then calculate the TDS. Again, 192.1a and 192.1b, which talks about tax on non-monetary perquisites, the TDS would be deducted on non-monetary perquisite. The TDS would be paid on non-monetary perquisite at monthly intervals by the employer. Then we talked about ESOPs. Now, ESOPs only for 80 IAC, the startups made, there is a deferment of TDS deduction, and the TDS would only be deducted within 14 days of either of the three, whichever is earliest. Number one is after expiry of 48 months from the relevant assessment year, or 14 days from the sale of such securities, or 14 days from the date when the employee ceases to be part of that startup. Clear? And then we did some case laws of tips and doctor who comes on visiting basis. Now you may ask your final salary questions. Yes, Sumit, absolutely correct. At the very beginning of the year, before first deduction or before receiving the first payment, the employee has to tell whether he is exercising his option of deducting the of a 115 BAC. Now, what happens, students, in general practice also, by first 10 days of April or first 15 days of April, depending upon how the salary cycle goes, every employer tends to take all the declaration in Form 12BB from the employee regarding his deductions, regarding his options he want to exercise, regarding his losses, other incomes, so that they can compute that. No, no, Padmanam. In any case, the tips will not attract the TDS because tips are not something which are paid by the employer. It's just reimbursed by the employer. Obviously, when you talk about startups, a good question that how will company get to know whether the employee has sold such security or not? Obviously, they will have to tell them, because if they will not tell, if they will not tell the employer that they have sold such securities under section 191, where we talk about direct payment, then the employee has to pay such tax within such timelines. Then the employees has to pay such tax on ESOP within such timelines strictly. So if the employer fails to do so, the liability is on the assessee to do so. G Prasad, absolutely. TDS rate would be applied. Who deduct the TDS? The employer deduct the TDS. So he will deduct so and so TDS, and the employee, and obviously if he's deducting the TDS which was required as per the relevant assessment year, employee will also compute the tax as per the relevant assessment year, tax as per relevant assessment year, credit as per relevant assessment year. No liability of that year should arise in previous year 26-27 in the hands of employee. Okay, so Nitesh says if the salary is paid on daily basis, again, if you pay salary on daily basis, it would not be more than 2,50,000. In particular scenarios, you may be talking about the labor to whom you pay, but if you pay, then dude, you are in actually salary reduction. Then you have to deduct it every month. But generally, people don't pay it. Okay, G Prasad, I'll just come on your question. Okay, Sumit, good question. Whether reimbursement of expenses to employees form part of salary and TDS will attract on under section 192. So again, you have to answer this thinking whether the reimbursement of expenses would become salary. If they become salary, then TDS would be attracted. So would become salary means whether they would be taxed as perquisite. If they are taxed as perquisite, then it would become your salary, and then it hence TDS would be deducted. For example, school fees, or for example, house electricity expenses, if reimbursed or basically borne by the employer, are my perquisites, and hence the TDS would be attracted. Anything which comes for salary, total salary head may which comes, the TDS should be deducted on that at all times. So if TDS is short deducted, basically when it comes to salary, in major cases it does not happen. But if it does happen, then on prudence basis, it should be said that only the part on which the TDS is not deducted, uska 30% should be disallowed. Viranjano, TDS pay salary pay TDS would be deducted always at the time of payment, whether you're paying it as per the accrual concept or whether you're paying it on as in advanced salary or area salaries, everything would come at the time of payment. And when we talk about arrears salaries of government, which we get to know later only, on that the TDS would be deducted at the time of payment. But yes, relief under section 89 would be given. Sumit, again, TDS applicable on PF part of employer. Again, I'll say whatever is going in my salary computation, everything is liable to TDS. You make a salary computation, this may you take house rent allowance, then you take exemption on house rent allowance, then you take your other allowances, other exemptions, you take your professional tax, everything after that, whatever is coming as my salary income taxable would attract the TDS, whether it's PF, whether it's ESI, anything, superannuation, anything which is taxable as salary is liable to be deducted under section 192. G Prasad, taking time constraint 115 BAC just gives us more elaborative rates, more progressive rate. Instead of we have 5%, 20%, 30%, they give us 5%, 10%, 15%, 20%, 25%, and 30%. It goes on from 2.5 lakhs to 3 lakhs, 3 lakhs to 350, 350 to 4, and so on. Okay, so one person has asked this question for the final ESOP part. If for previous year 21-22, I'm a startup. Again, it is only applicable to startup, and I'm saying again and again. For previous year 21-22, salary is 1 lakh, perquisite is 8 lakh. Salary is 7 lakh, perquisite of sweat equity share is 1 lakh. Tax would be deducted only on this 7 lakhs, and you will also have to pay tax only on this 7 lakhs. Now cut to previous year 26-27. On this 1 lakh, TDS would be deducted at the rate of previous year 21-22 as per section 192(1)(c), and you will include this 1 lakh. On this 1 lakh, tax liability would be computed as per the rates which is in previous year 21-22, and you will pay the tax taking the TDS credit. And in most of the cases, there would be no tax payable by the employee because whole would be deducted as TDS. Anything else further? Take your time because this is a new section having small things. Yes, Sumit, benefit of rebate under section 87A would also be given. Good. Because see, again, I'll say when we talk about salary deductible from the employer's perspective, he is making a computation for each employee. He is making a computation for each employee, and whatever goes in an income tax computation, the total income, salary income majorly, other income which you have told, gross income, then deductions, then gross tax liability, then any TDS which you tell him that you will get, all of this. After that, he ensures he deduct the TDS, and then he gives you form 16. Usme part B, part A always have all these details. Clear? Good. I'm very glad with everyone's participation today. So now, shall we proceed? Next, we come to section 192A. Please, again, I will not write it in this format, I will tell, but now you people will write it in this format. Section, type of payment, deductor, deductee, rate, threshold, time of deduction. Okay. Section 192A talks about withdrawal of accumulated balance of provident fund. So if there is a withdrawal of accumulated balance of provident fund, then TDS under section 192A would be deducted by the person who is making such payment, basically the trust or the EPFS scheme, to the person who is getting such payment, who would be employee at the time of payment. At the time of payment, will deduct TDS at the rate of 10% if the withdrawal amount is less than 50,000. So if the withdrawal amount is equal to 50,000, you will deduct the TDS. It is more than 50,000, you will deduct the TDS. The TDS is deducted on the whole amount, not on the just excess amount. So if 60,000 is withdrawal, on whole 60,000, the TDS at 10% is deducted. This is applied, in fact, for all the TDS rate barring 1 and 2. Now, everyone, what is first again? What is withdrawal of accumulated balance of provident fund? Now, every month, provident fund may you contribute, employer contribute, right? If it is an SPF, you get tax deduction under section 80C. The same is not deducted as the same is not taxable as salary. Interest is also not taxable, and so on. SPF is statutory provident fund. If it is a URPF, unrecognized provident fund, then you do not get any deduction under section 80C. The interest is taxable. No deduction of employer contribution also. Everything is taxable. Correct? Public provident fund may employer-employee does not come. Now, left is recognized provident fund, RPF. Now, generally, this recognized provident fund का procedure क्या होता है? Every company either maintains a provident fund account of their own, which is recognized by the commissioner. Okay? Then only it becomes a recognized provident fund under the EPFS scheme, which is Employee Provident Fund Scheme. Okay, then the account is recognized, and every fund has trustees, which are generally your employers only. Okay, so every fund has a trustee, which is your employer. Now, what happens whenever a contribution is made? The employer contribution and the employee contribution. Employer contribution goes into salary, but is not taxable up to the extent of 12%. Employee contribution, you get a benefit under 80C. Interest on employer contribution, not taxable up to 9.5%. Interest on employee contribution, not taxable. Correct? Now, every year you are making the withdrawal. Now, such withdrawal when made is exempt. Such withdrawal is exempt as per your, just one second. Such withdrawal is exempt in the hands of the employee. But to discourage premature withdrawal, to discourage early withdrawal, such withdrawal is exempt only and only when such withdrawal is made after 5 years from the first date of contribution. So after 5 years from the first date of contribution. Okay. Again, any withdrawal made from the accumulated balance of the provident fund is exempt if made after 5 years from first contribution, or if it is done in the cases of termination due to ill health, contraction, discontinuance of business, cessation of employment. Okay, if in those scenarios you make the provident fund withdrawal, then also it is exempt. But if you make a provident fund withdrawal within that 5-year span, within that 5-year span, then this is taxable in the hands of employee, number one. Number two, if it is taxable, then TDS is attracted under section 192A. Again, to summarize, Any withdrawal made from RPF is not taxable if it is made after 5 years. And when it is not taxable, Section 192A is not applicable. But any withdrawal which is made within the 5 years from the first date of contribution, then the withdrawal amount is taxable in the hands of employee, and the TDS is required to be deducted by the person who is making such payments under Section 192A. Now, ma'am, you will say, so this means if we join an organization, we have to work there for 5 years, or else the PF amount would be taxable? No, the income tax understand this. Suppose there is a discontinuance of service and then you join it somewhere else. You got some attractive package, you join somewhere else and you transfer the PF balance to another RPF. Transfer the PF balance to another RPF, which is now under the new employer. Then this 5-year limit would taken to be continued and it would not be considered as withdrawal and no taxability will arise. So basically to see 5 years, period of previous employer, period of new employer would also be considered if it is a recognized provident fund. So can I say, when as per Rule 8 Part A of the 4th schedule, any provident fund, any withdrawal from the cumulative provident fund is not taxable. But if it is made before 5 years, that provident fund is the treatment is tend to be taken as it is a URPF. And when it is a URPF, everything is taxable. All the exemption which you take has to become taxable. That would be taxable in the hands of employee. But the person who is making the payment may or may not know how much is taxable in the hands of employee or not. Hence, there is a flat rate of 10% if the withdrawal is of 50,000 or more, and the TDS would be deducted at the time of payment. Again, the person may be resident or may not be resident. Any doubts? But if it is made after 5 years, it is not taxable and hence no TDS deducted. If suppose I work 2 years here, then I transfer it to a new employee, to the new employer, and then I withdraw it. So the whole period would be considered to see whether 5 years has happened or not. So can I say basically from the year of opening of account, from the date of opening of account till the date of withdrawal, at least 5 years should have lapsed to make it not taxable. Correct? But if you make the withdrawal because of your ill health or because of discontinuance of the business, because of the cessation of the employment, or because of any other disability, then this would not be taxable. So to understand it, if you have a better understandability of the taxability of withdrawal of PF, 192 will just say when it is taxable, then it has to be, the TDS has to be deducted. 10% rate. Yes, from Sumit, I hope from the first date of contribution, basically when your PF account is opened in your name. Okay, so generally this taxability you people should know, but how this taxability goes, whatever the withdrawal amount comes, it will come with 4 parts: employer contribution and interest, employee contribution and interest. This interest would be taxed as other sources. This interest would be taxed as salary. If suppose the interest was 8% all the times, this would be taxed as salary because it would not have been taxable at all. Anything over and above 12% would be taxable. Not over and above 12%, whatever the employer contribution is there would be taxable, because suppose the employer contribution is 13%. Is time pay when making the contribution, you would have got 12% deduction and 1% would have been taxable. So this 12% of basic salary would be taxable as salary. Employee contribution to the extent taken as benefit under section 80C becomes taxable under other sources. So employer contribution and interest on employer contribution goes in salary. Employee contribution to the extent the benefit is taken under section 80C and interest thereon goes to other sources. Clear? But for you 192A, full 10% flat TDS. Again, G Prasad, if you shift it from RPF to URPF within that 5 years period, then it would be taken as the withdrawal of accumulated balance and then it would be taxed. When you're transferring it, it should be transferred to a recognized provident fund only. See, these provident funds are as per the EPFS, but no private or no unrecognized provident fund. I am clearly here talking about the withdrawal of accumulated balance of an RPF. Accumulated balance of URPF, if withdrawn, is not taxable. You know why? Because everything is no benefit is given at the time when the contribution is made. So that's why. But here you get the benefit when the contribution is made. Up to 12% of the contribution, ATC benefit, interest is not taxable. That's why you have to pay the tax at the time of withdrawal. SPF के लिए this is not applicable. Nitesh, 197A, I will discuss it then only. Okay? You may have an idea of it, but otherwise it's better to discuss it later. Any other doubt from the URPF, from the RPF section? Again, summary. Any person who is making a withdrawal of accumulated balance will get from a provident fund, which is a recognized one, and the amount withdrawn is 50K or more, then the person ensuring such payment will deduct TDS at the rate of 10% at the time of payment under section 192A. Unrecognized provident fund, Raman, see, again, unrecognized provident fund ke liye it is not there. You may withdraw it after 1 year, you may not withdraw it at all, because when the contributions are made to unrecognized provident fund, no benefit is provided to the employee. So any withdrawal is not taxable in that sense. Benefits are given when you make a contribution to a recognized provident fund. So if the government is providing you benefits, then they want to basically have a lock-in period of at least 5 years. If you are withdrawing it before that, then you have to pay the TDS. Basically, all your benefits given are getting taxed. Just like it happens in ATC, every like house property ka bhi there is lock-in period, ULIPs ka bhi there is lock-in period, just like that. Yes, they will deduct the TDS. Before making the payment to you, you will get the deductible amount, net of deductible amount, I'll say. Okay, students, so with this, we'll take a 10 minutes break and we'll continue our TDS journey. We'll start with section 193. Meanwhile, if any other doubt arises, you may write it in the query section. Thank you. So welcome back after the class, everyone. After the break, everyone. I hope you people got time to refresh yourself. Just few questions before we move ahead. So Sumit, actually the name of, see, when we're talking about RPF trust, the name of that trust, so every organization has a trust basically in their own name. Suppose I'm talking about Pepsi. So Pepsi has its Pepsi's Employee Provident Fund Trust. So that would appear there. But the section would not definitely be salary. It could be 192A. It would go as PF withdrawal, correct? Accumulated balance of PF withdrawal. Absolutely correct. If the amount is 50,000 or more, the TDS would be attracted. So before going to break, we did discuss what actually this chapter contains. Then we discussed TDS generality, and we started with section 192. 192 definitely took time because it has some few many new things. After that, we covered 192A. Now we take up the speed and we start with section 193. Okay. 1 second. So now, section 193, please write it. Students, section 193 is interest on security. So any person who is making a payment in the nature of interest on security will deduct TDS at the rate of 10% at the time of credit or payment, whichever is earlier, only if this payment is made to a resident person. So if any interest payment on securities is made to a person other than a resident person, then that payment would go under section 195, which is a residuary section for payments to non-resident. So any person making a payment in the nature of interest on securities will deduct to a resident person will deduct TDS at the rate of 10% at the time of credit or payment, whichever is earlier. Now, students, as such, this section does not have any threshold limit. There is no threshold limit. Now, another thing which you have to remember, sections basically now majorly sections coming onwards from section 193 onwards, basically in all these sections, the payee, basically the deductee is the resident person, number one. Number two, seeing the COVID times and to increase the cash in the hands of the person, the TDS rates were reduced by 25%. So if the rate is 10%, the TDS rate is now 7.5% only for the period from 14th May 2020 to 31st March 2021. Again, I'll repeat, the TDS rates have been reduced keeping in mind the COVID times in sections where, basically not for all sections, but where if you will see only in those sections where the payee is resident, to give their persons the benefit, the TDS rates have been reduced by 25%. So it is not applicable to 192A. I did not tell you then. It is not applicable to salary. What is this applicable to? Now, going forward, you will read the sections. I will tell you on which section this is applicable, but this provision has come into income tax as per the provision of section 197B. So section 197B lists the number of sections on which this reduced rate would be applicable. And just to give you an simple way to remember is that all those sections which will specifically just cover resident persons will attract this lower or this COVID benefit of TDS rates. So every rate covered in that section is reduced by 25%. So in this, instead of 10, it would be 7.5%. Please don't ask that whether if 20% rate is applicable, then whether it would be reduced. No, when the PAN is provided in those scenarios. Actually, students, one thing which was not taken up under section 192A was, I told you at the beginning that PAN, if not paid, 20% of the TDS rate, whichever is higher, is to be taken. But in case of 192A, if the PAN is not provided, then MMR rate is to be taken. What is MMR for previous year 2021? What is the MMR for previous year 2021? Quick. What is the MMR for previous year 2021? It is 42.744%. So you should know. So then in this case, only for 192A, if you do not provide the PAN, TDS would be deducted at 42.744%. Good, Nitish. Back to 193, again, this 10% rate for the tax which would be deducted. So that's why not deduction rate is very important. Between 14th May to 31st March 2021, only on those rates, a lower rate of TDS would be applied by 25%, and this is provided in section 197B. But I will let you know in all sections particularly where it is applicable. But for you to remember, it is easy that you take wherever the resident person is there, only resident person is there, this reduced rate benefit is given. Any doubts? Sure. So interest on securities, I was telling you about that on interest on securities, whenever the payer is making such payment, he has to deduct 10% of TDS. No such threshold limit is there. But when we talk about interest on debentures, which is interest on debentures, which is paid to resident individual or HUF, then the TDS would only be deducted at the rate of 10% when the interest amount is more than 5,000. Interest amount is more than 5,000. When the interest amount is more than 5,000. Next, no, please write it wherever you're writing. No interest on TDS is required to be deducted on any defense bonds, government securities. So any government securities which are there, no TDS is required to be deducted. Any DMAT securities which are there, no TDS is required to be deducted. Any interest which is paid to LIC GIC, which is paid to LIC GIC, no TDS is required to be deducted. So if LIC, because LIC and GICs are the one which keep holdings in such investments which carry huge interest amount or huge dividends, for them, no TDS is required to be deducted. No government securities, no DMAT securities. But government securities, when I talk about interest, when I talk about government securities, 8% saving taxable bonds issue of 2003 and 7.75% saving taxable bonds of 2018, interest is required to be deducted, and only when the interest amount for the whole year is more than 10,000. Is it clear? So there is no such threshold limit for this section, but interest on debentures is attracted, TDS on interest on debentures is attracted only when we are making a payment. TDS on interest on debentures, if paid to any other assessee, all time the TDS is to be deducted. But if paid to resident individual or HUF, TDS would be deducted only when the interest amount is more than 5,000. Government securities, but there is no government securities can interest pay, no TDS has to be deducted. But if the government securities are in the nature of 8% saving taxable bond 2003 or 7.75% saving taxable bond year issue of 2018, then TDS has to be deducted and has only to be deducted when and only when the interest for the year exceeds 10,000. Clear? Then 54 EC while securities paid, no TDS is required to be deducted. So basically you can go through the list and this is all what is written there. Any doubts from 193? Next, after that, generally until last year, we used to move for 194A. But now, okay, some few questions. G Prasad says, ma'am, interest credited or payment made, what is the difference? If you remember, at the beginning of the class only, I told you that most of the TDS is deducted at the time of credit or payment, whichever is earlier. Credit of that expense or credit of that income or payment, whichever is earlier. So this is what that context means, because abhi tak the TDS sections which we covered, both of them attracted the payment at the time of payment. Attracted the deduction of TDS at the time of payment, but this and going forward will attract TDS at the time of credit when it is due in the books of accounts or at the time of payment, whichever is earlier. No, I'm not saying. Okay. Interest on securities, what type of securities? Debentures of companies, all of these are covered here. But yes, no government securities are covered. Any interest bearing securities, bonds are there, all of these will attract. What is the difference when we credit or payments? Again, students, the difference is just making it due and then when it is paid. That is the difference, just the accounting entry. You make the due entry generally in most of the cases first, then the TDS has to be deducted when you're making it due. Suppose it is due to be paid. I'm not saying accruing it overall. If I'm taking your context, suppose it is due to be paid on 30th June. So 30th June tak you take, it is due, but it is credited to the accounts of the holders only on 1st July. So the deduction date would be 30th June, not 1st July. Is it clear? I'm assuming you're getting confused with the concept of accrue. That is not there. It is when you're actually making the due entry. Now, section 194. Now, before 194 is revived from this year, I can say. It was there earlier also, but now it is very much there because now dividends are taxable. Domestic dividends are taxable. So section 194 has gained importance. So any domestic company, I can say, making a payment, any domestic company making a payment of dividends, will to a resident shareholders. Who is my payee? Resident shareholder. Will deduct TDS at the rate of 10% before distribution or payment. Before distribution or payment will ensure the TDS is deducted if and only if the TDS per person or per payee exceed 5,000. So this threshold is 5,000, rate is 10%, nature is dividend, payer is domestic company, payee is resident shareholder. Students, again, this limit is per payee. All these limits which we are discussing is per payee. I, as a domestic company, obviously be paying more than 10,000 rupees, but per payee, per PAN number basically is this limit. And again, since this is a section which is applicable to a resident payee, this rate of 10% for COVID times have been reduced to 7.5% for a period of 14th May. And you have to remember this date till 31st March 2021. As per section 197B, the reduced rate is provided in 197B. Again and again, I'm saying. So the dividend is less than 5,000 and is not paid in cash, no TDS would be attracted. Clear? Moving on to next section. Now section 194A. Yahan se some more trickiness starts. Section 194A, payment of interest other than interest on securities. Now here I want everyone's undivided attention again. अभी तक 192 में payer was any person, 192A में payer was any person, 193 में payer was again any person, 194 में payer again domestic company. Now from here onwards, you have to pay one more thing attention. 194A talks about if a payer being any person other than individual HUF, That means individual HUF does not require, do not have to deduct TDS. No, that does not mean. Or individual HUF or individual and HUF having business turnover of 1 crore or in case of profession, gross receipts of 50 lakhs. In the preceding financial year, then they will require to deduct the TDS under section 194A if they are making the payment in the nature of interest other than interest on securities, at the rate of 10%. And the TDS has to be deducted at the time of credit or payment, whichever is earlier. आगे से there are many categories which covers only individuals and HUF having turnover of 1 crore in terms of business or 50 lakhs receipt in terms of profession in the preceding financial year. Example, if in the preceding financial year, for me preceding financial year would be previous year 1920. If my turnover is 2 crore, then in this financial year, I have to deduct the TDS while making any such payments. Okay, if in the previous financial year my limit was my turnover was 90 lakhs, and in this financial year my turnover is 1 crore, I'm an individual. Whether I will deduct the TDS under section 194A, I will not. So students, when I talk about TDS is a very altogether very compliant process. Let me give you why individual and HUF have this benefit. TDS is a very compliant process. You have to deduct TDS every month. You have to deposit TDS every month. You have to file your returns quarterly. Then you have to issue the certificates quarterly. Then there are intimations which you have to go through. So this is basically a very compliant procedure in which you have to have someone dedicated to it every time. So to basically to give the benefit to individuals HUF at a lower scale, working at a lower scale, this limit is defined. Earlier, this section wrote limit as per section 44AB, which actually gave confusion to people. Now, from this year itself, they have clearly written business turnover of 1 crore in the preceding financial year or professional receipts of 50 lakhs in the preceding financial year. Now, your question will come, and if I'm getting tax, if I'm not getting tax audit, I'm claiming presumptive income, and my turnover was 1 crore 20 lakhs, still again TDS would be required to be deducted? Yes. TDS has nothing to do with your tax audit or not. TDS, if your turnover is more than 1 crore or your professional receipts are more than 50 lakhs, TDS, you will have to obtain the TAN number and you have to deduct the TDS. Now again, in the next financial year, if your turnover reduced, then you do not have to see it. Preceding financial year may, if the turnover criteria is matching, then as an individual HUF, you have to deduct the TDS. But this was not applicable when we were doing 192 or 192A. It obviously does not come. 193 is for securities, 194 is for company. So this section onwards, this will have a reference in my 194C, 194J, many common sections. So please remember, every person other than individual HUF and individual HUF having the requisite turnover. Now going onwards, I will use the word requisite turnover in the preceding financial year will deduct TDS if the payment is made to a resident person. Again, this section also covers only resident person. This section also covers only resident persons. So, and since it covers resident person, this limit is again 7.5% for the period of deduction between 14th May to 31st March as per section 197B. Rate bata diya, time. Time is credit or payment, whichever is earlier. I have written it, sorry. Threshold is left, right? What is the threshold? Now, threshold for this section is 5,000. That is when you are making the payment of more than 5,000. Only 192A included 5,000 also as the limit, but otherwise in all the sections except few, the limit is triggered when the payment exceeds that threshold limit. When the payment exceeds that threshold limit, okay? So more than 5,000 is the threshold limit. But when we talk about, now please here listen carefully, the exceptions. When we talk about the interest paid by bank, cooperative banks or post office, basically banking company, cooperative banks or post office on time deposits, What are my time deposits? Recurring deposits, fixed deposits. Then the interest deduction would, TDS deduction on such interest would be attracted only when the interest for the year is more than 40,000. And in case of senior citizen, payee, when interest is more than 50,000. So if a bank is making a payment to Mr. X having an interest of 30,000 for the year, will the TDS be deducted? No. If the bank is making a payment to Mr. X having a interest of 55,000, TDS would be deducted? Yes. And when I talk about senior citizen, I talk about only resident senior citizen, and obviously this section covers resident only. So time deposit. So when I say time deposit, that means no TDS is attracted on interest of saving deposits. So saving deposit ka interest, whether it is crossing 5 lakhs, 4 lakhs, 1 lakh, 50,000, 60,000, no TDS is attracted on saving deposits. Generally, students, saving deposit ka interest to cross 5 lakh, 1 lakh, you have to have crores ka deposit during the year. But coming to the point, no interest, no TDS is required to be deducted on interest on saving deposits. Another question, students. Now this limit of 40,000, I told you all these limits are per pay, per PAN. Okay, now when I talk about bank, I have an account with ICAI Bank, suppose, and I have that account, I have one FD at their Delhi branch, another FD I have at their Mumbai branch, another FD I have at their Jaipur branch. Okay, Delhi branch pays me every interest of 15,000. Mumbai branch pays me every interest of 15,000. And Jaipur branch pays me every interest of 30,000. Now a question comes whether TDS is required to be deducted. I told you I have FDs maintained with ICICI Bank at 3 different branches. So whether TDS is required to be deducted on this, yes or no. Interest is 15K per annum, 15K per annum, and 30K per annum respectively. The answer is yes, because this 40K limit is not per branch, it is per bank in total. So bank ki tan se per pay how much interest is paid on time deposits. Clear? So they will, and now we have core banking system, CBS. So they will have to require to deduct the TDS. And students, since I've talked about CBS में what happens? Every day they compute interest, but it is not credited in your account. It is not reflected in your account, I should say. But every day CBS system computes interest. So now when we talk about credit or payment, whichever is earlier, does that mean every day the bank has to deduct the TDS? The answer is no. There has come many CBDT clarifications on this, that CBS may macro accounting के purpose से every day the interest is calculated, but the TDS is required to be deducted only when it is actually credited in the account of the, or actually reflected in the account of the payee. Okay, so this is clear. This is one exception. 5K, 50K, 40K, clear. 194A is still there. Let me take your questions. 50,000 limit is for senior citizen. Yes, for companies and firm there is no limit. This is only for individuals and HUF basically working for a low scale of a turnover of 1 crore or gross receipts of 50 lakhs. Padmanam, if declaration has been done as per Companies Act, I'm not sure what is the time limit, but they need to ensure that the payment is done. So TDS is obviously attracted before distributing in their account. Till the time it is declared, it is not an income of this SE either. Dividend on mutual fund units are not covered, only shares, dividend on shares. Mutual funds, we have different sections. See, bank will definitely know how many deposits are there in a single person name in a single PAN. So, Abhi, what did I tell you? Interest on other than interest on securities are attracted when a person making a payment in the nature of interest, any person except individual HF and individual HF, when they have the requisite turnover, to a resident person will deduct TDS at the rate of 10% or 7.5%, whichever is applicable, I should say, or as the case may be, when the payment of interest is more than 5,000. But if the payer is bank, cooperative bank, post office, and they are making your payment on interest on time deposits, then the limit is 40,000. And if you're a senior citizen, which is the pay is the senior citizen, then the limit is 50,000. Now, students, many of you have to be attentive, and I'm saying again and again, seeing whether 7.5% would be applicable or 10% would be applicable. Okay. One thing, if nothing is given in question about the date of deduction, and it's just a statement question that how much rate has to be deposited, how much rate the TDS has to be deducted, then make sure you write both the rates. Make sure you write both the rates. If the deduction time is particularly clear, then write the rate which is applicable. Okay, now apart from that, there are more exceptions. I hope you people note, as in I say, no interest on, no TDS on interest paid by firm to partners, basically interest on capital. And partners, again, resident partners, non-resident partners made TDS is applicable as per section 195. Interest paid, any interest paid to LIC, GIC or their subsidiaries, in then interest on saving account, clear. Any interest on income tax refund. You receive income tax refund, okay, uspe, if it is delayed, then you receive interest also. On that interest, no TDS is deducted. Then no TDS on interest on post office schemes. Interest received on post office schemes, like your national savings certificates, your Kisan Patrika, all of these. Clear? Now, last exception is cooperative societies. Now, isme there is an amendment. Again, I will request you all to focus on your screen. Now, cooperative societies, ka student, what is there is that cooperative societies, if pay interest to the members or to any other cooperative society, to members or any other cooperative society, no interest was, no TDS was, sorry. No TDS was required to be deducted. No TDS was required to be deducted. But now they have changed it and they have said cooperative societies, let me just make a table for you to make it easy. Interest paid by cooperative societies engaged in banking business, which is my cooperative banks. They will deduct the TDS on interest if the payment is more than 40K or 50K, correct? Always. This we saw. But when I talk about any cooperative society engaged in banking business, not a cooperative bank, but any cooperative society engaged in banking business, any primary agricultural society, any primary agriculture credit society, or any cooperative loan mortgage bank or loan development bank, or loan mortgage or development bank, or development bank will deduct TDS on interest if it is more than 40K or 50K senior citizen के case में, if and only if the cooperative society or the cooperative bank which I'm referring to in the preceding financial year, had a turnover of more than 50 crore. Had a turnover exceeding 50 crore. Okay, so now what is this? The cooperative bank which we discussed here, that is always okay. But any cooperative societies paying it to members or other cooperative societies in income in the nature of interest, or any primary agriculture credit society, or any cooperative loan mortgage bank or loan development bank paying interest to any person, if not a senior citizen, for more than 40K, or if a senior citizen for more than 50K, and has a turnover in the preceding financial year of more than 50 crores, then they will deduct the TDS. So earlier, what was the scenario? Earlier, unconditional exemption was given to them that no TDS would be deducted. Unconditional exemption was given that no TDS would be deducted on such interest paid by cooperative banks or cooperative societies. But now they have to deduct the TDS if their turnover, the person who is paying, their turnover is more than 50 crores in the preceding financial year. Clear? Because many cooperative societies are working on a large scales, are enjoying really so many benefits. So if they have so much amount of turnover, they should be TDS compliant. Clear? So these are all the exceptions which are covered under section 194A. Please give a look to it. Meanwhile, I look to your questions. Yeah. Exceptions clear? Acha, if everything is clear, tell me. I have one FD with ICAI Bank at Delhi, yielding me interest of 20K. Another FD with Kotak Mahindra or Kotak Mahindra, whatever you people say, Delhi again, yielding me interest of 25K. Another with HDFC Bank, Mumbai, yielding me interest of 14K. Whether TDS is required to be deducted now? Is TDS is required to be deducted now? No, obviously, because per pair, per payee, the limit is not exceeding 40K. So clear? So please be very careful whenever you're doing such questions. So on this note, let's do some questions. Please look at your screen. I'm sharing it. On your screen, you have some question. Examine the TDS implications under section 194A in the cases mentioned hereunder. First cases, on 1st October 2020, Mr. Harish, aged 45 years, made a 6-month fixed deposit of 10 lakh at 9% per annum with ABC Cooperative Bank. The fixed deposit matures on 31st March 2021. So he had made a 6 months deposit Calculate the interest. After calculating the interest, tell me whether TDS implications are there under section 194A, and assume in all the cases the PAN is provided and the person is resident. Absolutely correct. So 10 lakh pay, 9%, but not for the whole year, only for 6 months. 45,000 pay, TDS would be deducted. Please do not deduct it at the rate of 10%. 7.5% students, 3375 is the TDS which is required to be deducted, because after 14th May it is getting taxable. Next question. On 1st June 2020, Mr. Ganesh, aged 35 years, made 3 9-month fixed deposits of 3 lakh each, carrying interest at 9% with Dwarka branch, Janakpuri branch, Rohini branch of XYZ bank. Same bank, 3 different branches. TDS attracted if for all in aggregate the limit is crossing. A bank which has adopted CBS. The fixed deposit mature on 28th February 2021. Tell me if TDS is attracted and what is the amount on which it is attracted. So Sumit, you made a mistake of 4,500. I hope you will not. Now, what is the amount? Calculate the amount, students, please. I may have shown the answer, but not an issue. $2,250 per branch, 60,750 in total. It is crossing, so at 7.5%, 4,556 is the TDS which is required to be deducted. Okay, now next, let's see who is able to crack part 3. This is important. On 1st October 2020, Mr. Rajesh, aged 40 years, started a 6-month recurring deposits of rupees 20,000 per month at 8% with PQR Bank. The recurring deposit matures on 31st March 2021. 20,000 per month is the recurring deposit, students, and recurring deposit may, again, let me give you a hint, every month the balance increases. Calculate it. Quick. Yes, TDS would be deducted by each branch, but see students, all these things, when we talk about banks, this is core system, everything is calculated at back end. No branch or branch of manager has to ensure that the TDS is deducting. Everything is so computerized. In your 26 AS, it will not be reflected as this branch has deducted so and so amount. It will not be reflected like that. There is one TAN number for the bank and there is one PAN number for you. The TDS would be deducted accordingly. Students, last, I'm waiting for the answer quick. $28,000. What is the interest amount? No, all of you are not getting it correct. Give me the answer on this quick. No, the one who gives the correct answer will have a shorter. It means you are not calculating the interest properly, students. 20,000 per month. Interest amount is not 8,000, not. One second. Let me show you the calculations. No one is getting it correct. No worry. Okay, everyone on the screen, I'm sharing it. 1 second. Every month, how much is deposited? Two lakh per month, right? 2 lakh per month starting from 1st of October. So 6 months के लिए the amount is deposited every month. Okay. Now every month the balance goes 2 lakh. इसके लिए तो there is 2 lakh, right? But next month it is 2 lakh plus 2 lakh, 4 lakh. Then next month it is 2 lakh plus 4 lakh plus 2 lakh, 6 lakhs, and so on. Correct? So every month the TDS is calculated at the rate of 8% per month, right? On the closing balance of the month. So 2 lakh for October, 4 lakh pay again 8% for that month, 6 lakh pay again 8% for 1 month, 8 lakh pay 8% for month, and so on, and total comes to 28,000. So no TDS is required to be deducted. I think one person gave 28,000 as the correct answer. Sorry, my mistake. So TDS is required to be deducted. Sumit Agarwal, good, very good. Only one person who gave the correct answer. No TDS is required to be deducted since the interest is falling below 40,000. Everyone got 28,000 as the answer. Now how it came, this is the interest amount. And these are my every month RD balance. RD means recurring deposit. Here, yes. Sure. So interest section 194A is also clear. I hope you people will not make any mistake going forward. Now let's go to our next section. Section 194B. Hmm. 192 salary, 192A PF withdrawal, accumulated balance of PF withdrawal on RPF, 193 interest on securities, 194 dividends, 194A interest on other than interest on securities. Correct? Now we come to 194 and 194B. B and 194BB. Both of them have same thing, so I will do both simultaneously. Here 194B covers winning from lotteries, casual winnings like crossword puzzles, winning from lotteries, games, etc. And section 194BB talks about specifically winning from racehorses. Winning from lotteries and winning from racehorses. Both sections are independent, both have the different limit, but I'll be doing one and another would be understood. This section covers every person making a payment of the nature of lotteries, etc., to any person. So this also covers resident and non-resident both. Take an example of KBC in your mind. At the rate, they will deduct the TDS at the rate of 30%. At the time of payments, if my credit will not come at the time of payment, if the lotteries are more than 10,000. More than 10,000. So if in KBC you get out at first or second question, no TDS would be deducted. If you cross 5 questions, any winning which you receive, they will deduct 30% and then they will pay it to you. So if you've seen Mr. Bachchan quickly just transfers the amount, but niche there comes a disclaimer that all the winnings are distributed after necessary tax implications. Okay? So they do not directly pay you. It is paid after the deduction of 30% tax. So isme if you will not pay your PAN number, then also they will deduct 30% only. Isme they will not deduct 20%. Clear? Yes. And same goes for winning from racehorses. Winning from racehorses, mein bookmarker, the person who is actually organizing the event, will make sure that if your winnings are more than 10,000, he will deduct the tax at 30% before making you such payments. Now in this section, student, one typical question comes, which is of winnings in kind. Suppose I have a Hyundai showroom and there was a lottery system going on and one person got car as a lottery. Now 30% TDS has to be deducted. Now I cannot deduct 30% of the car and just or I just remove the tires and give him the car. No, in that case, when winnings are in kind, there's a direct clarification or direct instruction from CBDT that whosoever is in charge of releasing the game prize or the lottery amount has to make surety that the requisite TDS has been deposited to the credit of government. The requisite TDS has been deposited to credit of government. Now, how will they ensure? Suppose your car has been come out as a price. I know the car price is 10 lakh. So either the car value is 10 lakhs. Okay. So before giving it to you, I will tell you that please deposit 3 lakh as TDS. Give me the receipt of the same. This is my TAN number. Deposit it. And then only I will release this car. Or if you are so much of generosity that you do not recover it from them, you automatically bear it yourself. That is also fine. Governments just want that the person releasing such gift before releasing has to make sure that the TDS is deducted and deposited. Not deducted, but TDS is deposited to the credit of government. Whether he has to ensure it by any means. You pay, I pay, it does not matter. Obviously, if I will pay, then the gross winnings should be increased accordingly and then grossing up should be done. That is a different matter. Clear? So this typical question comes from this particular section. 194B clear, 194BB clear. Next is a very important section, and I believe this would be the last one for today. 194C. Very, 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 very important section. So everyone, if has any second thoughts in mind, can ask it before we proceed ahead. Sure. Next part is 194C. TDS on payments to contractor and subcontractors. TDS on payment to contractors and subcontractors. Section लिखा, payment nature लिख लिया. Payer is contractee. Why is contractee? I'll tell you. Pay is contractor, or I should say resident contractor. Rate is 1%, 2%. COVID times rate change also. And threshold limit. Now here each and everything requires discussion. TDS has to be deducted at the time of payment or credit, whichever is earlier. Now here, except payment or credit, we'll discuss on each and every thing. Okay, So first of all, I and you have a contract. Listen here. I and you have a me and you and I have a contract. Sorry. Who among us would be a contractor or a contractee? You have to provide me the service. You have to provide me the service. So who is the contractor? You are the contractor. I am the contractee. Who is the payer? I will pay you for the services you have provided. So I am the payer, you are the payee. So resident contractor are covered here. Clear? Now since there are resident contractor, first let me come to the payer. Payer can be any person who's actually taken the who's the contractee. Again, same. Any person other than individual HF, and individual HF only if in the preceding financial year they have a business turnover of more than 1 crore and or professional gross receipts of more than 15 lakhs. Okay, this clear? This clear. The rate of TDS is 1% or 2%. 1% or 2%. 1% is when the payment is made to individual HUF. 2% is when the payment is made to other than individual HUF. 1% when the payment is made to individual HUF, 2% other than individual HUF. Now this is the COVID times, resident pay is there. So that means this rate is reduced by 25%. That means 0.75% if paid to individual HUF between if the TDS deduction is triggered between 14th May 2021 to 2020 to 31st March 2021 and at the rate of 1.5% if the payment is made to other resident persons other than individual HUF between 14th May to not payment made, but the TDS deduction triggers between 14th May to 31st March. Clear? Now coming to the threshold limit. Threshold limit is that if your per bill is more than 30,000, then I will deduct the TDS, or if the per bill during the year is or not more than 30,000, but during the year your total credits as a person are coming more than 1 lakh. Let me explain it to you. On your screen, there's an example. There, I made a payment to Mr. X for under section 194C. First payment was of 25,000. Okay, Mr. X is an individual, resident individual. First payment of 25,000. Turn limit is 30,000 per bill or 1 lakh in aggregate. Will I make the payment? Will I deduct the TDS? No, I will make the full amount of as payment. Then second bill came of 28,000. TDS required to be deducted. Aggregate 1 lakh not crossing 53,000 per bill less than 30,000. Third bill came, aggregate 82,000 till date. Per bill is also not crossing 30,000. So no TDS again. Now fourth bill came and the limit is crossing 1 lakh, but no single bill is crossing 30,000. TDS would be attracted? Yes, TDS would be attracted. The moment your person pay credit during the year crosses 1 lakh, the TDS under section 194C would be attracted. Under section 194C would be attracted. Not the question will come on what amount the TDS would be attracted, the whole amount exceeding 1 lakh or the whole amount or the amount exceeding 1 lakh. So the answer is on the whole amount. The TDS would be attracted even in the previous bills also. Will this be a matter of late deduction? No, this will not be a matter of late deductions. Why? Because deduction was not triggered here. It was not triggered here. It was not triggered here. It has been triggered here only when the total amount is crossing 1 lakh. So on this 1,03,000 at the rate of 1% or in COVID times at the rate of 0.75%, you will deduct the TDS and then you will make the net payment. Clear? Second example. First payment came from Mr. Y. First bill came from Mr. Y. It was for 35,000. I had to deduct TDS. Yes, I have to deduct TDS. On what amount? The TDS has to be deducted on 35,000. Why? Because the bill is crossing 30,000. So 35,000 pay 350. Please let's understand it with 1% example, not 0.75. Okay. Then second payment came. Second bill came. Bill was of 15,000. TDS on this bill attracted? No. Overall also it is not crossing 1 lakh. Third bill came. TDS on this would be attracted? No. Overall it is also not crossing 1 lakh. Fourth bill came. 29,000. Now overall 1,07,000 ka amount has come. Now 1,07,000 pay, you will not deduct full 1% because 1,07,000 pay 1%, 1070 means so already 350 you have deducted. You will reduce it, and in the fourth payment you will deduct the TDS of 720, which is nothing but TDS on 15,000, 28,000 and 29,000, and then you will make the payment. Clear? Yes or no? If the tax is paid by the organizer, will it be the additional benefit for the... Okay, now you have asked it. What is the status for? See, TDS is deducted when credit or payment, whichever is earlier. Also per bill limit or aggregate limit you have to see. Now I will answer your question as per COVID times. Suppose this came on 1st of April 2020. This came on 13th of April 2020. This came on 25th of May 2020. This came on 31st of January 2021. Now you will think that this ये जो एक bill है इसमें तो obviously I will deduct 1% because 35,000 के time पे the first bill went credited or paid. Credited was on 1st April, so I had deducted 1%. ठीक है? Now here a question will come. Obviously, 13th April wale bill पे TDS is liable to be getting deducted only on 31st January. Now students, your 197B, which is the lower rate, says that the TDS is required to be deducted at the lower rate, rates. Okay? And when the TDS is required to be deducted? On 31st January. So the lower rates which are applicable from 14th May to 31st March, on this 31st January payment, the liability to deduct TDS is getting triggered. So on this whole 72,000, 7.5% would be applicable irrespective of when this bill is, because liabilities to deduct the TDS is getting triggered between the timeline which is allowed for lower deduction. Because again, I am repeatedly saying that the timeline you have to be very careful for, because 197B says if the time of deduction is between 14th May to 31st March, then only the lower rate would be given. So here the time of deduction is between 14th May to 31st March. So on this 72,000, then I will deduct the TDS at the rate of 0.75% and then make the payment. Clear? Prasad, I hope your answer is given here. Nitesh, I hope your question is also solved. Now, other points in your TDS part, please. Focus now on 194C. Back to it. Just like, and to make it more better, you can see an illustration also. This will answer all of your questions. ABC Limited makes a payment to Mr. X, a contractor, for contract work during the previous year 2021, 20,000 on 1st May, 25,000 on 1st August, 28,000 on 1st December, and on 1st March 30,000 is due to Mr. account of contract work. Discuss whether TDS is liable to be deducted at source. Yes, because including the 1st March payment, the amount is exceeding 1 lakh. 20 plus 25 plus 28, 73 plus 30, 1 lakh 3,000. On 1 lakh 3,000, TDS will be deducted at 0.75%. Sorry. Which is 773, and that you will reduce it from 30,000. So even if the bill was of prior to 14th May period, still the liability to deduct is getting triggered between 14th May. So hence you will take the lower rate benefit. Clear? Okay, so now back to few important points, and I hope you're jotting it out. TDS, when paid by individual or HUF, is not required to be deducted if paid for personal purposes. So even if I have a more than crore turnover in the preceding years, but if I get a person for contract who is whitewashing my house, okay, my personal house, I will not deduct TDS under section 194C for them. Clear? So for personal purposes, if paid by individuals, HUF are not covered. Secondly, TDS is covered on work contracts. Work is where there is supply of labor and some work. So contracts which are covered is work contract, where there is some labor and some work. And by work, what do you mean by work? By work, there's a definition, inclusive definition given in your module in your income tax, which covers work includes advertising. That means any payment made for advertising would be covered under section 194C. Work include broadcasting and telecasting, including production of programs for such broadcasting or telecasting. So if I'm making a payment to a production company for broadcasting or telecasting a program, that would be 194C. What is broadcasting? Coming on radios, telecasting, coming on TV. So on this, if you will, yeah. On this note, if I can write any payment made to advertising agency or production house, if I make a payment, or say Mr. X make a payment to production house like Balaji Telephone will deduct TDS under section 194C, correct? But if this production house makes a payment to any actor or actresses or any professional who is working on their set, then 194C would not be attracted. Then what would be attracted? 194J. Again, they may make a subcontractual payment, then they make 194C. So it just simply means, just like in the case of another example, I want a newspaper advertisement, okay, on which I want Shah Rukh Khan to post for it. So whatever I paid for that to an advertising agency would cover under section 194C. But advertising agency, whatever they pay to Mr. Shah Rukh Khan would not cover under 194C. This is payment for the primary nature you have to see. For what you are making the payment, that nature you have to see. That should be a work. So work we saw covers advertising, broadcasting, telecasting, including production of programs, etc. Next, it covers carriage of goods or passengers by any mode of transport other than by railways. So if you are making a payment for carriage of goods or carriage of passengers by any mode other than railways, because railways may, if suppose I book a bogie, full bogie, I have to take my whole family to a wedding destination, the payment comes to the whole ticket expenses come to 45,000, I will not deduct the TDS. If I hire a bus to go to Ranthambore for a wedding destination wedding, and the bus ka expense comes as 45,000, I will deduct the TDS? No, because it is for personal purpose. Okay, don't say yes. But if I'm a company, have to take all my employees to recreational activity to Ranthambore, 45,000 ka bus payment I have made, whether I will deduct TDS? Yes, I will deduct TDS, carriage of passengers. Okay. Then catering. Catering में again, if you go to events, खाना पीने के जो organizer होते हैं उनको caterers कहते हैं. We call them caterers who organize us for the food. Any payment made to them is your work. Now, last, manufacturing or supply a product according to the requirement or specification of a customer by using material purchased from such customer or its associate. Now, what is this? Students' work includes job work. This is nothing but job work. Job work is when I'm a person, okay, I have to make a payment to Mr. X. I want office furniture to be built, okay. So office furniture is to be built by a person, Mr. X. I provide him the woods. I give him my specifications. I give him my specification and I also give him the raw material. Then he makes the furniture as per my specification. That is job work. And that will attract 194C. And that will attract 194C. But on the other hand, if I go to Mr. X showroom, I saw a sofa out there and I want it for my office. I told him that instead of blue cover, I want pink cover all over the sofa, pink clothing over the sofa. Mr. X makes pink clothing and gives me. Whether it will attract 194C? No, because 194C is attracted only on work contracts. Work contracts means job work, and job work means where there is your specification plus where there is the material which you have supplied to him. On both the thing being present, only there would be a job work. So in this case, the sofa was his only. There was just minute specification from my side. It was not a contractual payment. It was indeed a purchase of good, you can say, a purchase of good. So any payment to be deducted under section 194C in case of job work has to have your material and your specifications. Now, from this year onwards, there is an amendment where they have said that that material either you can provide or your associate, who's your related party, can also provide. Both in both the scenarios, it would be said that the person has provided the material. The assessee has provided the material. Again, I will repeat. In case of contractual service, in case of 194C, the TDS has to be deducted only when there is a payment in the nature of work contract. Work contract I'm talking about job work. Job work means when the something has been provided as per my specification and as per the materials supplied by me. Clear? So if there is one thing missing, it would not attract 194C. It would be a simple purchase of goods. Clear? Yes. Now, other points in this only. Whenever I told you there work means supply of labor plus some work, right? Whenever I talk about job work, in general scenarios, he will only give you the bill. In general scenarios, he will only give you the bill of his services, that is his labor. But in case the bill contains material ka price, the bill contains labor ka price, both are there, you will deduct the TDS on the labor amount only. But if the amount is inseparable, only one amount is given, then the TDS will be deducted on the whole amount. Clear? Yes or no? Now, other questions. Then I will take in one line all your questions. Okay? I already talked about courier, already talked about carriage, goods carriage, right? So if carriage is equal to work is equal to contract and is equal to 194C, TDS attracted. So if the other person who is the payee is a transport holder and gives you a declaration along with his PAN, that he has less than 10 trucks, then no TDS would be required to be deducted. But you have to have the PAN number of such person. So what did I say? I am into manufacturing business. Off and on, I require trucks to transfer goods. So this truck person tells that I only have 2 trucks with me. Kindly do not deduct my TDS. So I say, okay, but I make you payment more than 30,000 during the year. So he says, please take my PAN number. This is my declaration. So as per Income Tax Act, no TDS would be required to be deducted. Clear? Next is courier services pay. They have made clear that TDS would be deducted. Courier services will attract TDS. Now you must ask basically, ma'am, in case of you have written work includes carrying of passengers by any mode of transport. So if I travel through a first class ticket and the plane ticket is obviously more than 30,000, will it attract TDS? So this specific clarification is there. On one ticket or normal traveling tickets, TDS is not attracted. But yes, if you book the full plane for your transportations, then the TDS would be attracted. Okay. And what else is covered? All other things done? Yes. Last and most important part here, as per specification, again a common example comes, a common circular is there, and then your queries, and then we will wrap up. Okay. So I take this very favorite example of mine. Nowadays, you have seen all these mythological serials are very much on the go. Okay? Every channel has its own mythological serial going on, right? So what happens? Star Plus person approaches Balaji Telephants that I want a mythological show, say on Lord Shiva, and I want this person to be Ram, not Ram, this person to be Shiv, this person to be Parvati, and so on, and prepared a show, and I will make, obviously Star Plus channel makes the payment to the production house, and I will make you the payment. So as per my specifications, as per my standardization, Balaji Telefilms produces the show. Now I will make them the payment. So this payment would be attracted under section 194C for TDS deduction. Everything was as per my specification. But now, if I take another example, I am Star Plus, I went to Balaji Telefilms, they already had one show ready, because so many show goes into productions but do not get airing time. Okay, so they already had one show ready as per this specific, not as per my specification. They already had one show which was already into production on mythological series. So they sold me that. I am Star Plus. So on this payment, whether 194C would be attracted? No, 194C would not be attracted, because again nothing was done as per the specification of the channel. So 194C would not be attracted. It would be just sale of copyrights in general. Clear? So this is all about from my side. Now I'll take few questions. So we have covered from section 192 to 194C. In the next class, we'll be taking section 194D onwards, and we will cover all the sections of your TDS and will start TCS. So before that, let me take your questions and sorry. Okay, so if for a single work, there are many contracts, single work, many contracts. See, you have to just see the payment to a person. If it is more than 30,000, then obviously at each bill, you will deduct the TDS, right? Even if it is crossing more than 1 lakh in the whole year, at each bill, you have already deducted the TDS. So there is no worries. Sumit says if the previous year 1920 bill payment is made in previous year 2021, guys, first thing I told you, credit or payment, whichever is earlier. Bill is for 1920, it is due for 1920, so you will deduct the TDS in 1920. Okay, GST component, I did not want to tell it. I want to tell it at the end, but no worries. There's a clarification that not particularly for GST, it was for service tax, so it is implied for GST also, that all TDS, in fact, all TDS will not attract the GST, the TDS deduction will not attract the GST amount. So you have to deduct the TDS on the gross amount, which is before GST. Okay. Good questions. And I'm very happy with today's productive class. I hope the same for you too. Any other questions, students? Got 194C all clear? You want me to summarize it quickly? 194C covers contractual payments, basically. Payment to contractor, and that contractor, if subcontracted to someone, then he will deduct the TDS. The rate is 1%, 2%, 0.75%, and 1.5% seeking the coronavirus times. Individual and HUF will only deduct TDS when it is for not personal purpose and their turnover in the preceding financial year is more than 1 crore or 50 lakhs in case of professional receipts. Per bill limit is 30,000 or whole year it is 1 lakh. No TDS for personal purpose done. TDS for carriages or TDS to a person who gives you a declaration that I have less than 10 carriages during the year and this is my PAN number, you will not deduct the TDS. TDS is only for work contract, labor plus work. Work includes advertising, broadcasting, telecasting, catering, and carriage of passengers and your job work. Job work would include only and only when you provide the material, also give the specifications. If the material and service component is separate, you will deduct the TDS on service component. If it is not separate, you will deduct the TDS on the whole amount. That's it. This is done. So this is all about your 194C from my side. So thank you so much for today's class. I hope you enjoyed it, and see you all in the next class on Saturday, right? Yes. Take care. Have a good sleep. Thank you.